Today in crypto, the promise of a longer and healthier life has dominated both cultural and medical discourse for centuries. From the first accounts of Nicolas Flamel's philosopher's stone granting immortality to the latest superfood that promised to reverse aging, we are captivated by the idea of a longer and more vibrant life. Encouragingly, the longevity sector has proven that a longer and healthier lifespan isn't just a magazine headline. It is an attainable reality. Humans will not only live longer but will have more active, healthy and engaged years on this earth. Research units from all over the world are making discoveries every day. Medical advancements, fueled by intensive research and experimentation, are changing how scientists, doctors and even cultural commentators think about how long and how well we can live. We are, indeed, now in the era of longevity. What is driving these incredible breakthroughs? Pure creativity and innovation. The advent of artificial intelligence, genetic engineering and a renewed interest in public health stemming from the COVID-19 pandemic are catalyzing discoveries at an unprecedented rate. To maximize the impact of these researchers, the future of innovation will need to be collaborative and cooperative. It will take a village to make longevity understandable and accessible to medical professionals and average individuals alike. Gary Mudge is a managing partner at Long VC, a Switzerland and Cyprus-based venture capital firm accelerating innovative startups in biotech and longevity. He is a seasoned business expert and angel investor with several successful exits across biotech and tech companies. He is a longtime supporter and investor in biotech companies including in silico medicine, deep longevity, and base pause. Continue reading on Cointelegraph. Welcome to the latest edition of Cointelegraph's Decentralized Finance, DeFi, newsletter. The DeFi space was full of fundraising this week. Read on to discover where the venture capital firm led by Reddit's co-founder is making notable investments. Near Protocol offers $800 million fund to advance ecosystem. FAF update guidance on DeFi and NFTs for first time in 2 years. QuickNode raises $35 million in series of funding round. Immunify raises $5.5 M to advance DeFi security offering. Token performances. Continue reading on Cointelegraph. A project launched just over a month ago has taken the world of crypto by storm. EverGrow Coin, a deflationary token designed to become scarcer over time, was released without the usual hype or paid celebrity promotions, and yet has grown organically to record levels over a very short time. A mature team of developers, marketing experts, and finance professionals put together the revolutionary contract, which pays 8% of all transactions back to holders in a regulated, fiat-backed stablecoin pegged to the US dollar. Over the last few days, the project has flown past the 50,000 investors mark, $700 million market cap, and is quickly approaching $10 million in rewards distributed amongst holders since launch. The team has created a dashboard where anyone can track the rewards paid by the contract, both for individual wallets and the combined total. You can view this at the team behind EverGrow Coin recognized immediately the need for a project offering a viable passive income, with a market cap supported by real-world fundamentals. Sam Kelly, chairman of EverGrow Coin, said, "We have seen too many projects which have launched and grown to eye-watering valuations based on pure hype. At EverGrow Coin we have taken a very different approach. Along with our industry-first rewards system, our roadmap includes the early introduction of real-world utilities, which will add true fundamental value for investors. Those utilities include the world's first decentralized NFT lending platform. Built on BSC, the platform will allow NFT owners to readily borrow against their NFTs as collateral at fair interest rates without selling them. The team are also launching an NFT marketplace, play-to-earn games, and the world's first crypto-integrated creators space, that many experts believe could rival OnlyFans. With a current market cap around 1/5 of that of SafeMoon and over 50 times smaller than Dogecoin and Shiba Inu, many analysts are identifying EverGrow Coin as the value investment in the cryptoverse for 2021 and cite it as the next Dogecoin. Facebook's decision on October 28 to rebrand itself to Meta, to indicate its plans to build an avatar-filled metaverse, helped spark a speculative rally across cryptocurrencies that belong to similar virtual world projects. Decentraland, a virtual place with its own economy, currency, MANA, and social events, accessible to anyone with a web browser, saw its market valuation explode from $1.44 billion to $2.08 billion over the past 24 hours. This happened as its native token, MANA, jumped by around 45% to $1.14 in the same period. Continue reading on Cointelegraph. It's been famously said that the only two certainties in life are death and taxes. For many of us, the only thing spookier than preparing your own funeral arrangements is preparing your own taxes, especially if you're in crypto. That's why it might be a good idea to partner with crypto tax experts heading into the end of the year. In 2017, which was a very high growth year for cryptocurrencies, prices went up tremendously and then dropped significantly in 2018. I saw taxpayers that had massive taxable gains in 2017 and then lost their entire portfolio the next year. Now the IRS is calling, and those individuals still must pay taxes on those earlier gains, but they don't have the funds. Proper planning and tax optimization services can help prevent that, according to Justin Woodward, Nasdaq WWD, a tax attorney who specializes in digital assets and is the co-founder of TaxBit. TaxBit has offered a comprehensive tax solution for cryptocurrencies for the past few years. It's a great solution that connects directly to the crypto exchange you use and does all the transaction tracking and using smart programming to identify taxable transactions. This week TaxBit launched its corporate suite of crypto tax solutions. And to make your personal taxes less scary, Woodward offers these 5 cryptocurrency tax tips to help plan for current and future tax seasons. The IRS currently classifies cryptocurrencies as property, not securities. As such, that asset class is taxed at the short or long-term capital gains rate depending on how long you've held an asset. If you hold a cryptocurrency for a year or less, the short-term tax rate for 2020 ranges from 10 to 37% depending on income and filing status. If you hold a digital asset for longer than a year, the long-term tax rate applies, ranging from 0 to 20% on profits, said Woodward. Another important consideration is understanding that you are not taxed only when you convert your cryptocurrencies back into fiat currencies such as dollars or euros. Taxable events can occur even if you swap a crypto asset for another token, including stablecoins such as USDC or DAI. A key determinant of the taxable amount for each transaction will depend on your initial cost basis, which was how much you initially paid for each respective token versus its price at disposition when you sold or converted into something else, he said. Woodward also noted that as with most assets, initially acquiring any given digital token is not usually a taxable event. Neither is moving tokens to a different crypto exchange such as Coinbase, Nasdaq Coin, or a digital wallet. However, disposition of a token at a loss or profit is a taxable event in most circumstances. Also, if someone sends you a digital asset in exchange for a product or service or you earn interest in the form of a cryptocurrency, those are taxable the same way interest earned on traditional securities would be taxed, he noted. When it comes to tax minimization tactics, cryptocurrencies can be excellent tools to easily harvest losses if you're a high-income earner looking for some write-offs. Volatility is an inherent attribute of cryptocurrencies and smart investors can use that to their benefit. When wide swings happen, it's extremely wise to take a loss if you can. Say you have one Bitcoin that drops $5,000 in a day. You can legally exchange that for a stablecoin or any other cryptocurrency and then immediately buy back that same Bitcoin within minutes. There is no repurchase waiting period as with other securities. This is a tremendous way to intentionally harvest losses by documenting the initial loss while also lowering your cost basis on the repurchase. Lastly, and perhaps most importantly, tracking the tax impact of your cryptocurrency trades can be easier and safer than you think. Linking the exchanges where you make transactions and crypto wallets to some of the newer crypto-focused tax tracking software can fully automate the process for both individual investors and businesses, even for transactions dating back to 2014. Woodward noted that under recent tax changes, past losses can be carried forward indefinitely until they are fully claimed. On the flip side, if this upcoming tax season is your first year dealing with the tax implications for cryptocurrencies, It's best to seek expert help by contacting a tax preparer or accountant with experience in digital assets. But don't wait. Many people mistakenly believe that taxes are completed only once a year, but it requires vigilance all year long, especially when you're invested in cryptocurrencies. Why you should care. During testimony before the Senate Finance Committee earlier this year, IRS Commissioner Charles Rettig stated that the U.S. government fails to collect as much as $1 trillion in revenue every year, due in part to recent exponential growth and interest in cryptocurrencies. Email newsletter. Join to get the flip side of crypto. Upgrade your inbox and get our daily coin editors picks 1x a week delivered straight to your inbox. Contact Form 7. You can always unsubscribe with just one click. Continue reading on Daily Coin. Hit the like button and subscribe to the channel.